Many of my YouTube friends working in collateral management with large investment banks have asked me this question: what is senior debt versus subordinated debt? Let's take a look at that. As we already know, corporates raise capital by issuing equity or debt, or a combination of both, or one or the other. The main features of debt issued by way of bonds is there's regular predetermined interest payment, also called as coupon payments. There's a loan repayment on maturity, and there's collateral backed by the loan is backed by the collateral. This debt itself could be of two categories: senior debt issued by way of bonds, subordinated debt issued by way of bonds to which the lender subscribed to. The main features of senior debt are: it has got a priority in the claims during bankruptcy proceedings. Let's see how that works. As we already know, that when a senior debt is issued, it is backed by collateral. So senior bondholders get a collateral given by the corporate who issues the bonds. So when a company becomes bankrupt and the borrower becomes bankrupt, this collateral is liquidated. The collateral against which senior debt is issued is liquidated. The funds that we get from the liquidation of the collateral is then used to repay the senior debt holders first. So the number one priority is payment of senior debt. Subordinated debt is settled after the settlement of senior debt holders. So what happens then? The subordinated debt is issued generally without any collateral. So there's no collateral attached to subordinated debt. This is as good as unsecured loans. Unsecured loans means the borrower is bankrupt. When the borrower is bankrupt, the borrower's assets are sold, not just the collateral. All the assets are sold as per the bankruptcy proceedings. The senior debt is settled, and after the settlement of senior debt, only then the subordinated debt is settled. Okay, this is defined as the priority claim stack. So when a company goes into bankruptcy, the first repayment is towards senior debt holders, and then the payment takes place to the subordinated debt holders. This, if there's anything left over after this, only then the equity shareholders are repaid, which normally will not happen. I mean, that's the main reason why the company has become bankrupt, is because it's not able to realize the full cash flows from the assets. So all this is mentioned in the loan agreement, which has got covenants, which clearly states what is the nature of the debt. Is it senior debt or subordinated debt? So the main features of senior bondholders are they have normally paid a lesser coupon because they've got collateral claims, as well as they have a lesser, the investor has a lesser risk. So when you have lesser risk, normally the lesser coupon will be paid. Which of this is not a feature of subordinated debt? Is it paid first? Subordinated debt is very safe for the investor. Subordinated debt has collateral attached to it. Subordinated debt has a higher risk. So which of these is not a feature? Okay, this is not a feature of subordinated debt. Thank you so much for watching. If you like the video, do subscribe to my channel where we provide content rich